What's up, everyone? Welcome to a new update in which we are definitely going to discuss CPI of tomorrow. We're going to discuss PPI and we're going to discuss FOMC minutes. But before we continue, make sure to hit that like button, subscribe to this YouTube channel, and also make sure to check out our premium membership, which you can test for 1 week for free. It includes all our trades within the platform. Last month we did 14R, which means 14% in profit if you have 1% risk per trade. So we're doing quite well. Now, when we're looking at this week, the heavy weight on macro perspective is definitely today and tomorrow. Today we've had PPI coming in. As you can see, the tweet from myself, which means that the PPI and not core PPI came in at 8.5, higher than forecasted. Month to month is also higher than forecasted. Core PPI comes in lower, which is what we actually want to see. So conflicting numbers here. The PPI is trailing down, so inflation is trailing down. This comes from 12% and now it's 8.5%, so that's a good sign, but not as much as we want it to be seen, as we still have core numbers being too high. Also, we saw some serious volatility during this event, so I've tweeted this out earlier, which means that if CPI comes in, and also probably FOMC minutes tonight, be aware of the actual events as they have a huge impact on the markets and volatility will be high during those. So stay away from high leverage. Now, when we're looking at the events, we can see PPI today. Core PPI PPI month to month is 0.4. Positive again after 2 months of negative numbers. Core PPI was just as expected. And we saw Lagarde speaking today and GDP of the UK, which is terrible. It's negative once again. And now tonight we have got FOMC minutes coming in. And now when we move towards tomorrow, we can see CPI numbers coming in. Also some other important events are taking place with IMF and G20. But tomorrow everyone will be focused on CPI month to month, which preferably has to be below 0.2%. And also year on year, and core CPI and unemployment claims. This is definitely the big event of tomorrow, something to keep an eye on. Then on Friday, again, we've also got consumer sentiment, which is probably going to trail down again and heavily is as expected. And we've got retail sales coming in, so lots of heavyweights during these days, which implies that volatility will be a lot, and also implies that this will finally start breaking out of the range. As we can see that the dollar is still showing strength. We got it here. We have been making these charts earlier in the live stream from last week. Apologies for missing the one on Monday, but my health issues are still there. Now, when we're looking at the price action of the DXY, we can definitely conclude that the strength is still on the markets. We can still see this upward trend, and we can still conclude that the scenario that we have here is most likely going to happen or take place as a whole. So we are in the territory of a potential top on the DXY. It is a matter of time until we can see the actual impact of it, and it has to be due to inflation numbers or to unemployment skyrocketing, in which we saw some information from Intel coming in today as they are cutting staff heavily. Now, when we're looking at the DXY, the trend is still upwards, which means that crypto is not doing well, which means that the indices are also not doing well, which are swimming around the lows. Pretty important support level, as we can see here. So I preferably want to see that hold. But in order to have any bullish momentum, we need to reclaim the previous level at 11,000 points. Unless we stay beneath, the market is going to turn south even more. And even if we break 11, we can run to 11.5 and still have to flip 11,000 to have some momentum over here. But as we know, all eyes on CPI, so it will have a huge impact on the markets tomorrow. Then another market which is actually into a bull cycle, it is the yields on the government bonds. 10 years for US has been rallying from 2.6 to 4 almost, is implying a top coming in relatively soon as well. And we also can be seeing the Great Britain one, which has been skyrocketing from 2 to 5 within 2 months. And therefore we can see the impact on the markets quite heavily. And given the chart that we have here, there will be an outcome for this within maximum 10 days. So then you will be seeing a huge drop off in the yields. and that will also imply that DXY is going to drop and that risk on assets are definitely going to take momentum or have some momentum overall. Now, when we're looking at Bitcoin, what are the odds? Well, technically speaking, we are still into a consolidation. So we try to break above 19.6, drop beneath, rejected here. And if you were following my live streams, you knew that we had a short trigger here, which came all the way towards 18.8. I doubt we are going to have the retest around 18.6, but we are in between. So we are in between levels again. Crucial on that is a breakout above 19.3. If 19.3 breaks again, I think that we run towards 20k quite fast, and from there we can start looking up if we are finally able to flip 19.6. If numbers are going to be bad tomorrow, definitely going to sweep the lows here. So then I'm looking at a scenario that we sweep the lows, reclaim, and then that's a trigger towards the other side of the range for a potential play for Bitcoin. But anything between 18.8 to 19.3 is definitely not a play that I'm looking at right now, and I think that the overall markets are all looking the same, as everything on the markets is showing us consolidation at this point. Higher time frames are looking like we are going to have some serious continuation coming up on the markets, or at least some volatility, as Bollinger Bands are also squeezing. But we need to flip those levels. Bearish case, breaking south of 18.8, flipping it negatively is going to trigger a scalp short. Dropping beneath the lows here and then reclaim is definitely your long trigger. I would not be looking for shorts in this area of a breakdown. I think that it's going to be a fake out. If we break above 19.3, the flip of 19.3 is also a long trigger in which we can start targeting 20.7 and potentially 22.4. So are we going to crash with the markets with CPI? I doubt we will. There are also big events taking place with FOMC minutes coming in tonight. We also have the retail sales on Friday, unemployment coming in. So it's not too certain that we're actually going to crash. And I think that most are betting on a crash, which will most likely not happen. Thank you for joining in. Tomorrow I'll be bringing another update, or I'll be live at 7 p.m. Check out my Twitter where you can see what I'll be posting. Make sure to hit that like button, subscribe to YouTube, and I'll see you again tomorrow.